Hi, welcome to my presentations on how to borrow to buy a property using your self-managed super funds. So before I start my presentations, I just want to tell you a little bit about myself so you know who I am and what I do, okay? So who am I? My name is Eng Sivyang and I am the CEO and founder of TMS Financial Services Firm. We are a certified practicing accounting and financial services firms. We help investors and business owners to get their whole entire financial house in order so that they have time to do other important things in their life, which, looking after their family or do anything that which is important to them. So we also help them to make more money, more cash flow, pay less tax in a legal way, and create wealth. And the most important thing is that what we're specializing in is actually help you to create or build a tax-free income for life so that you can actually live a super rich life, and which is what I'm going to share with you in this video is the strategy that you can actually do that. So I am a registered tax agent, so that's what we do. We look after the business owners and investors compliance, prepare tax returns, prepare financial accounts, and lodge the business activity statements and all the compliance matters. So I am a full licensed financial advisor and a self-managed super fund specialist, and I am a business owner and entrepreneur, and I am also a mother of 3 beautiful children, and I have been in this financial industry for more than 26 years. So this year is actually going to be my 27 years. And I have my own accounting practice for, I would say, over 19 years now. And guess what? English is not my first language. It's actually my sixth. So I apologize for my accent here because I can speak very well Mandarin, Cantonese, Teochew, Lao, Thai, and English. So please listen to my message, okay? Listen what I'm actually about to share with you, because what I'm about to share with you is actually going to be very, very important for you. Okay, so before I do that, I just want to give you a general advice disclaimer, because the information that provide during this video are of indicative nature only, and it's actually intended for educational purposes. It has been prepared without taking into account your objectives, your financial situations, and needs. So before you acting on any advice, you should consider the appropriateness of the advice and having regard to your personal circumstances. So before making any decisions, you should seek professional advice from a licensed financial planner and a tax professional. And what I would recommend you to do is that you should get a personalized advice session should be undertaken before you proceed with any strategies that I'm about to share with you in this presentation. Okay, before I explain to you how to actually use your self-managed super funds to borrow to buy property, what I want to do is that I want to explain to you why. Why do you want to use your self-managed super funds to borrow to buy property? Well, there's actually a lot of benefits there. But first of all, let me just share with you what happened was that before the 24th of September 2007, you actually can't do that, and they actually changed the law on the 24th of September 2007 that they actually allow the self-managed super funds to borrow. Of course, it's under certain conditions to buy property with the self-managed super fund, and this is actually changed in the section 67A of the Act. And this section is actually says that the trustee of a super fund can borrow to purchase an asset or to acquire an asset, provided the assets is held on trust until such time as the borrowing are paid, and the only assets to be provided as a security for the borrowing is the assets being purchased. So basically, you have to meet these conditions. It says that you can use your super funds, your self-managed super funds, to borrow to buy the property, but the property actually has to held in the bare trust, in the trust environment until when the loan is actually paid off, then that assets will get transferred back to the self-managed super fund. So I will going through step by step and explain to you how the whole thing work. Okay, so what are the benefits of using self-managed super fund loan? Well, if you can actually, you can use debts to create wealth. So basically, because you can actually borrow to buy property, right? So you don't really need that much money in your super funds. What I mean is that, say for example, if you only have like 150,000 inside your self-managed super fund, you can virtually buy a property by using borrowing strategies. And say if you actually can buy a property, say costing 400,000, and if the property, you keep it for 10 years, and if it's actually going to double in value, then you can actually create wealth very quickly. But of course, if the property doesn't grow, then uh, you're not going to get that benefits. But it's actually provide you the benefits of compounding, and I mean, assuming that your assets increase in value. So it allows you to actually leverage the investment in your preferred assets class, because a lot of people love property. So if you actually have your own self-managed super fund, then you can actually have the choice that you can actually borrow to buy property, and say for example residential property or commercial property, and you can keep the property for long term, and then when the property grow in value, then your super fund, your retirement savings also increase as well. And that's why using debt strategy can actually create wealth. And because there's the top benefits here is actually it gives you that concessional tax rate, because if you're actually at accumulation phase, that means before your retirement, the income that you earn in the self-managed super fund is only 15%. And if you actually do sell the assets, the capital gains tax is only 10%. But the main strategy here is like you want to be able to invest in assets, and you want to keep it until after you retire. Because after you retire, and when you transfer the funds from the accumulation phase to the pension phase, then any income that you earn in that pension phase, it's gonna be there's gonna be zero tax. There's no tax. And if you do decide that you want to sell the property, then it's also no tax as well. And that's why I say you can actually use your self-managed super funds to create your tax-free income for life. But you need to have a proper planning, because with planning you can actually achieve that goal. And the fact that now you can actually borrow to buy property, which is the fantastic strategies that I mean, a lot of people, if it's actually suitable for you, that you should consider. But you have to get it right. I mean, everything that, if you want to actually get the benefits of these strategies, then you have to get everything correctly done. Otherwise, you're not going to get that benefits, and you're going to get penalty. So I'm going to explain to you step by step, and just listen to what I'm actually going to explain to you, okay? Thank you for watching. Please continue to part 2, how to use your self-managed super fund to borrow to buy property. Bye. Anh,